And now I'm just going to focus on the Canadian side, understanding how I'm going through the assets. I will be going through how the CRA looks at it, and then try to summarize all the assets on the Canadian side versus US side. And of course, we'll look at the chart too, which is an amazing chart that you can go through and plan. So let's talk about Canadian residency, right? So Canadian residency is important. It's very important when it comes to how the taxes will be. It's very important when it comes down to finding out, are you still a tax resident or not? Are you still tied to Canada or not? And then there are many different factors. We have primary ties, we have secondary ties, and primary ties can include your family, your job. Of course, you're moving if you're job changing, or your investment. There are many things that go through. We have a test that goes on the Canadian side. So once we go through the test, we determine that, are you still tied to Canada or not? Remember, the test is very clear, and if there is an issue where you don't understand, are you tied or not, there's a form called NR73 form that you can fill out and send it to the CRA, and then let the CRA make the determination on your residency. So that form is available. That is the second option. We don't take that as a primary option. We'll take it as a secondary option. The first option is to go through your primary ties and secondary ties, see if you're still tied, right? So how do we do? Once we go through this, of course, we can see your social ties, your property, your family, your home, and then so when the ties get cut off, right? So again, the date that we look at is when you exit, or when your family exits, right? This is very important too. In cases where you have exited and your family's still back home in Canada, you're still tied to Canada. This is one of the main ties. These are one of the primary ties. And then also when you really establish your residency in US. So we do have certain things that need to be done on the US side for you to be considered a US resident. Of course, on the US side, we do have a substantial present test that you need to pass through before you're considered. The states are different. That test is for federal taxes only. The state are different. So depending on what state you move into, when you get your ID, when you get your apartment, when you really establish your residency within the state. So on the US side, it's a federal, where we have a test, and then we have a state which has its own rules. So Canadian residency is dependent upon the primary and the secondary ties, right? So again, if you are not sure, then fill out the NR73 form, send it to the CRA, and then let them make the determination for you, which is very important, right? We need the determination to be done, and we should know that you are a resident or not, because it matters. So this is how the Canadian residency is determined. If you're still tied to Canada, even though you have left and your family stayed back, of course, the CRA has the right to tax you on your worldwide income. That means, in some cases, majority of cases, additional taxes. Your US taxes are going to be lowered. There are some exceptions to some states and cities where we have a lot more taxes, but those are exceptions. Majority of the time, that's not the case.